Hi everybody, welcome back to the channel. Today we will be covering the basics of stocks. So essentially what a stock is, how to get your first stock through a brokerage, and which ones I use, and also, last but not least, what to consider as you are creating and diversifying your own portfolio. So essentially, the number one goal of investing in general, not just within stocks itself, but stocks, real estate, REITs, bonds, etc., is that you don't want to lose money. So with every investment, there's always going to be some form of risk associated with that. Our goal as investors is to minimize that risk and maximize our gains. First off, we will cover what a stock is. A stock is essentially a representation of partial ownership of a company. Let's say that there's Amazon, right, which is a public company, and you buy one share of it. You own that one sliver of the company. So again, there are two ways to make money through stocks. It's stock appreciation that we covered and dividends as well. And again, not all companies will have dividends. So just keep that in mind as you are doing your own research. Main goal of stocks obviously is to buy low and sell high. Step one of purchasing your first stock is that you have to open up a brokerage account. A brokerage account is essentially an account where you can use to trade both sell and buy stock. The brokerage account that I use is called M1 Finance, and I also use Robinhood. There are those are the newer ones. There are other traditional ones such as like Fidelity, Charles Schwab that you've heard of. The reason why I use the newer ones like M1 Finance or Robinhood, which are linked in the description below, is because you can do this thing called partial investing, which is fantastic, especially if you're starting off. You can buy a part of that. You can buy half that share, you can buy a third of that share, but you can buy what we call fractional shares in that. And as a company grows, you'll just get that X% associated with that. So that's been a great benefit that I've had with M1 Finance. And I want you guys to keep in mind and kind of think in the back of your minds as you're watching this video, what type of investor you want to be. Do you want to be a short-term investor or do you want to be a long-term investor? The different types of short-term investors are going to be day trading and swing trading. And last but not least, there is a separate realm called long-term trading, and that's kind of where I sit right now. And that's the best way to get passive income. And I want to cover different ways in how stocks can generate money as well. So there are two ways. One is called stock appreciation, which essentially just means when the stock goes up in value. When you buy a share and that goes up in value and you sell it at that higher price, that is money that you've made through appreciation, right? And that's probably the most common one that people think of when they hear stocks. And secondly, there are these things called dividends. Not all stocks and not all companies have this, but essentially it's a way for the company to hand out the money or a percentage as a thank you for investing and supporting their company. And that's given out on a cadence. So it can be monthly or quarterly. And I'll go over one that's my favorite called SPG, and that one has a high dividend. Someone that I've modeled my investing outlook is Warren Buffett. So if you guys haven't heard of him or read up on him, feel free to check him out later. Again, I am not a financial advisor, so please take things with a grain of salt. Do your own research before investing your own money into anything. Two is different things to consider as you are buying your stocks and creating your portfolio. One is to diversify your portfolio. What that means is you don't want to invest all of your eggs in just one basket. You want to be able to invest in not only multiple companies, but also multiple industries. Like, let's say, for example, you're investing in a lot of Facebook, Snapchat, Twitter. You're doing a lot of tech shares. You want to diversify not only the companies that you're investing in, but also the industry. So you want to maybe try something like retail might not be the best example, but different industries out there, aside from just tech, retail, etc. You want to diversify an industry as well. Given how volatile the market is, that is probably going to be your best bet in terms of how to decrease the amount of risk that you have by kind of spreading out your money. And then another good thing about investing in stocks is you can what we call liquidate it immediately. So think about it compared to real estate, right? Where your money's essentially just tied there. You can buy and sell pretty much anytime. Leave a comment if you guys have any questions at all, and I'll get back to you as soon as I can. But would love to support you guys because I know how hard it is to start investing and how daunting it is, given that, there are different types of investing. There's a lot of different types of brokerages out there and all these different, terminology that you might not be used to. Thank you guys for watching this video. If you enjoyed and learned something from it, feel free to subscribe below for weekly content. It's a new channel and I'm posting every week about different concepts on entrepreneurship, personal finance, and investing. Thanks again, and I'll see you in the next video. Bye.